please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Exchange. Indeed, today the Bombay Stock Exchange and the National Stock Exchange will be only watching Election Exchange. And hello and welcome to our Election Exchange special, the coverage of the battle for Gujarat and HP, as well as the impact on markets. Welcome to Morning Call Bazaar as well. I'm Latha Venkatesh, with me Anuj and Sonia. Well, you'll have to say that the election day is charged with very positive global cues. Yes. We are seeing all global markets on a high because of the tax reforms in the United States. And in India itself, of course, probably we will have to say that a BJP win is somewhat factored in after that fairly decent rally the market saw first on Thursday eve, late Thursday, and of course a better part of Friday. So today maybe we have a bit of distance to cover when the if the actual results were to mirror the exit polls, but perhaps a bit of the fire is already in the belly.
Oh, obviously. I mean, that's the kind of trend that we saw on Friday as well, right? You spoke about the global cues and how they're positive this time. Even the DII numbers, or the domestic institutional buying, has resumed after 3 days of selling, right? So there was almost, what, 635 crores of buying that we saw in the cash market on Friday. So that's another positive cue to work with. But Anuj, morning, well, we generally make it out to be a big day. But is it really? I mean, if the numbers come in at 110, 115, you think the best is already in?
Yeah, Sonia, you know, what's interesting is that global cues are also positive. So even if, you want to assume that the best is priced in, do you have enough ammunition to go out and short this market? Why would you want to do that? Because global cues are also positive. This is a case of a very light market. On Friday, this market is bereft of either aggressive longs or aggressive shorts. There's nervousness both in BJP supporters and in Congress supporters, something that I haven't seen for a really long time. So on Friday, for example, FIs unwound 12,000 longs and 12,000 shorts in index futures. I don't think anybody went home with either type of position, long or short. So this market is very light. It could make a big move in today's trade. There's been quite a bit of put buying and call selling, so that could lead to further short covering. If the number is, say, 120, 125 plus, that number needs to be there for further short covering, Sonia. But global cues are also positive. And you know what? If this is not a day to predict, this is just a day to see what the market is telling you post 10 a.m., post 10:30. And if the market is making a big move, then you have to participate in that big move. And then, of course, you take it with the global cues.
I don't know if this is an important cue, but we have seen domestic institutional buying resume as well, right? I mean, after 3 days of selling, we've got 600-700 crores of buying. Is that something you would look at?
Yeah, that's been the basic texture of this market. I'll tell you one thing, this Gujarat poll is important, not just from today's point of view, but from 2019 point of view. Because if the BJP does win, that will set the premise for 2019. That premise will be intact and economy-facing stocks may start to do well once again. A shock result would mean that the politics would be the biggest risk. But DI buying, I think that's been the reason this market has rallied. And just one more point. Every time you go towards an important benchmark like 9,500, 10,000, 10,500, this market has faced significant resistance. But once that mark is taken out, then that becomes a big support mark. You haven't revisited 9,500 or 10,000 after you have taken that out. So let's see if we can take out 10,500. That would become the next base for this market.
No, I take your point that the bottom of the market will definitely rise if the victory is, if the victory is actually in place. If the victory is outstanding, then the top of the market also will perhaps rise. But I'm not very sure whether if you take 10,500, there will be too many gains to be made. Unless, we start seeing, you have the third quarter results just round the corner. You have a whole host of other cues as well coming, the actual contours of the tax bill, how the GST collections pan out. I mean, it'll be business back to normal. Because as it is, the market is sitting on sizable gains and in terms of rich valuations. So we have to ponder after 10,000, yes, outstanding victory, 135 as Chanakya predicted, will definitely be a booster shot for the market. But beyond that, at some point, you will have to come back to reality.
At best, it would just reinforce the status quo. And then, you're back to earnings and global cues. On the other hand, the other outcome, I think, is something that the market, of course, will not hold.
I
So
know.
let's
If
see.
5 polls say something, and if the Chanakya poll, which has a better record than others, tells you, I think the market would be forgiven to not think of other possibilities. But yes, you're right that, as a trader, you perhaps want to just keep that 1% on the table.
Also, let's not forget this Himachal result as well. You're only talking about Gujarat.
But there I think there
it's
is
not
no-
obviously market moving, but, just...
I don't
just
think
want
there's any doubt about how that one will go.
Just want to put
Okay,
that.
we won't have to wait too long. Actually, counting begins at 8 a.m. So, in about maybe an hour from now, we'll get to know what the trend is. However, we also have a lot of macro cues to discuss. Lata, a lot of numbers coming out.
Well, just a couple of them that I've, will be a little bit of a dissonance for the economy. The e-way bill. I don't think Indian corporates are prepared for that. They wanted it to be postponed a little more. The fact that it is coming on Feb 1st. I spoke to a dipstick survey of, tax experts and India Inc. guys, and they believe that the disruption has to settle down before you bring in a new disruption like the e-way bill. Probably the collections have been less than satisfying, and maybe that's why it has been introduced. Probably there is a restless state government bureaucracy which is unhappy that a lot of power has been taken away of sudden inspections, and therefore probably to placate them this kind of reintroduction has been allowed. So that's not something that's gone down very well with the corporate sector, but they are not the guys who determine the market. It's just a disruption. The other number is the trade deficit number for November that we got on Friday after market hours. The numbers, no complaint about the exports. That's back to that 25 billion plus mark. The terrible number that we saw in October is now behind us, and it looks like some of the disruption is over. But even then, textile exports are contracting. So it does look like the GST disruption or something else is niggling some parts of the export industry. Gems and jewelry have done well, but textile exports are still contracting. They're less than year ago and month ago levels, which is not a very happy, and it's a very job-heavy sector, employment-oriented sector. So there is still some bit of dissonance in the trade deficit numbers, yes, but it is minor compared to the macros that we are dealing with today.
Oh yes, a big day, and as you can see, we have a shiny new set as well. So it's a big day for us here, and we get to know from our sister channel that the counting has now started, especially in Gujarat. Just I think. And HP, okay, both Gujarat and HP, the counting has already begun. So we're going to get you a bevy of big guests lined up for the day to tell you how to make sense of the larger picture. Joining us first up will be Morgan Stanley's Jonathan Garner and Rana Gupta of Manulife AMC. And as the early trends begin to emerge, joining in will be Rasesh Shah of Edelweiss Financial Services, Nilesh Shah of Envision Capital, and Ajay Srivastava of Dimensions Corporate Finance. A whole host of other market veterans will also speak to us through the day today. Keep it with CNBC TV 18.
All right, with that, let's take a look at what wise men are telling us before we start trading this morning. Mahesh Nandurkar of CLSA says that a relief rally is underway in the market, to potentially convincing win, which is 110 plus seats for the BJP in a state perceived to be the most impacted by GST and demon, should at best only boost market sentiment. Exit polls also suggest a strong win for the BJP in the smaller state of Himachal Pradesh, where the Congress is the incumbent.
Okay, that's the expectation from the markets, but we also have money markets to trade, right? Pramit Brahmavat of Veracity says, on a day of election results, the rupee is expected to remain volatile. However, the bias would be positive in anticipation of a BJP win. Trading range for the spot dollar pair is seen between 63.80 to 64.20 against the dollar.
You realize the magnitude of what you're reading.
Yes.
63.80. The dollar is going to cost less than 64 on a day when the dollar index is above 94. Yeah. So that's the kind of strength that the rupee is going to see because of the inflows that is expected with stable polity on the anvil. Okay, on bonds, Ajay Manglunia of Edelweiss says the bond market has managed to recover some of the recent losses towards the end of the previous week through a combination of short covering and value buying. But the confidence to hold on to positions from a medium-term perspective still seems missing, and so it is unlikely that the pullback will see sustained momentum. Ajay adds, gilts are expected to remain stable in the absence of near-term triggers. Expects 10-year benchmark bond yield to trade in a range of 7.09 to 7.15, much better than the 7.2 that we were struggling with.
Okay, so just following an agency, and the first lead is in favor of the BJP, so let's see how things move. Well, Wall Street is at a record high. Of course, someone who's also at a new high is Mangalam. He attended that A.R. Rahman concert, of course, but he joins us for the World View. Mangalam?
That's absolutely right. The world is a better place when A.R. Rahman sings in a high pitch. But talking about high pitch, Wall Street going out there and hitting it out of the park. I think the 85th record high in this year for the Wall Street itself. Dow Jones, S&P as well as NASDAQ. Lawmakers expect an early Christmas gift, likely to vote on the tax bill next week itself. And as a result of that, the analysts are expecting double-digit volume growth for the United States, double-digit earnings growth for the United States for the next 3 years in a row. 10.9, 11.4, 10.10% for the next 3 years. Taking a flight across the Atlantic then, more green than red in the European markets. The second round or second stage of Brexit negotiations is likely to begin. The retail stocks, they were underperforming. So H&M, that one fell about 13% on account of weak quarterly sales. In the Asian markets too, there is more green than red. If you take a look at the Nikkei, that's gaining despite some strength that we're seeing in the dollar yen. As far as SGX Nifty is concerned, we're battling our own Gujarat election exchange, and at the start we saw a great gain of almost 50 points, but that has come down to about 27, 28 points. Nevertheless, a start in the green.
Okay, thank you very much for that, Mangalam. We are getting early trends from other websites which are saying that 2 of the first leads have gone to the BJP. Only 2 are known and 2 have gone to the BJP.
It's 4-1 now.
No, it's
5
4,
out of 182, so 4-1.
Okay, 4-1. I think we're all tracking. Okay, now I have only 3 on my website, but let's see. The point is the first leads have gone, but very, very minor. It'll take a while. Probably it'll be 9 before we get a substantial number of leads. So at the moment it is open season. With that picture in mind, let's invite our first experts, Jonathan Garner, Chief Asia and Emerging Market Equity Strategist at Morgan Stanley, and Rana Gupta, Managing Director, India Equities at Manulife AMC, are joining us. Good morning, gentlemen. Thank you very much for being with us in what's an important day for the Indian markets and indeed in future for the Indian political economy as well. Jonathan, first to you. Your latest report indicates a minor lifting of weights in the overweight stance that you have in India. You've reduced the overweight levels. But I'll come to that in a bit. How much do you think a big win for the ruling party, the BJP, can mean to you as an investor?
Well, yes, we are slightly less overweight India than we were before. We're about 150 basis points overweight, but it's still one of our preferred markets going into 2018 alongside China and Brazil. And as you know, it's outperformed very nicely this year. I can't comment in detail on politics, particularly in an ongoing situation, but I think what's important to recognize is the Indian market has been increasingly supported by domestic mutual fund inflows, and that in turn is related to structurally lower fiscal deficit and lower inflation and a more stable interest rate profile. So as long as those things remain in place, then we can get this rather nice dynamic where you're becoming less dependent on foreign investors in the Indian equity market.
Jonathan, hi, morning. What is your view on emerging markets as a whole? Because it's been a fabulous year, 2017. What are the risks that we have lined up for 2018, and what kind of upsides do you see for emerging markets?
Well, in our view, it's not going to be as good a year next year as this year. So we have central banks tightening monetary policy in the US and in China. And in the course of next year, also the BOJ and ECB will begin to tighten. Our emerging markets target price is 1185, which is about 5% upside. Our Sensex target is 35,700. So we do see a reasonable market in terms of earnings growth, but the multiple is much richer than it was a year ago. And certainly for the non-financials part of the market, it's now really quite expensive to history, the financials being cheaper across the emerging world.
You know, just following some agencies, and it's turning out to be 9-4 now in favor of the BJP. But Jonathan, good morning. So for Indian market, what would be the key risk in 2018? Would it be valuation, earnings not catching up, or is this going to be a global bull market which is going to climb on wall of worries?
Well, the Indian market's been different from other emerging markets in the sense that growth has been quite choppy in India in the last 12 months. And so the earnings growth has been considerably less strong than in places like China, Taiwan or Korea. But we are quite hopeful that now that the teething period of GST is behind us and demonetization is almost a year ago, that we will actually see F18 earnings growing something like 12% year-on-year, and that should accelerate to 23% year-on-year for F19, with domestic sectors probably doing better overall than globally facing sectors. So that's sort of how we see it. So it's really the earnings growth acceleration and domestic mutual fund inflows that should underpin this market.
Okay. We're coming to you in a minute, Jonathan. We also have Rana Gupta of Manulife AMC with us. Rana, good morning. What's your sense? Will this win materially change the mood of investors, especially investors abroad who haven't been investing so much in the secondary market?
Well, election win in a state will have, if the market gets the outcome that they want, I think it will be positive for sentiment for a 1-2 week view. But fundamentally, we see that the reforms initiated towards formalization, that should keep the investors excited. And that is one reason why we think investors would continue to participate. Elections will come and go. There are like 4 or 5 major states going to election next 12 months. We don't think the outcome of the state elections will materially alter the reform process with formalization that this administration has set out.
Okay. Well, I just want to ask Jonathan, you know, Jonathan, you say in your research piece that one of the risks to the global equity rally is that you don't think the growth is going to be as good as perhaps people are calculating. But if that were to happen, if growth is less than market estimates, is it not possible that the central bank, especially the US central bank, will hike less than the market fears? So is this rally, global rally, really at risk?
Well, I guess what you just talked about is a sequence of events through time that would be obviously dependent on central banks recognizing that growth had weakened. But the process of recognizing growth has weakened would be bad for markets in itself. Okay. And I think that it's really a story for the second half of 2018 into 19, where GDP and to a greater extent our earnings growth expectations fall below consensus. We must remember that earnings growth expectations have been rising strongly and beating consensus for almost 2 years now in most markets we cover. That's not the case for India. There are other drivers for why the Indian market has done well, particularly the reduction in inflation and interest rates. But the overall situation will shift towards earnings tending to miss and maybe GDP tending to disappoint. And then at that point, yes, central banks will probably end up tightening less than is currently forecast. But it will itself not sort of reduce the somewhat negative outlook that we have in our base case.
Okay, well, it seems like the numbers are trending more in favor of the BJP right now. So it's 19-3, 19 to the BJP and 3 to the Congress. That's what one of the agencies are reporting at the moment. We'll keep tracking it for you minute by minute, but for now, it's much in favor of the BJP. Jonathan, I was going through your report and I did notice that there's one theme that you talk about with respect to rising domestic capex and automation. But I didn't get a chance to read through whether it is for markets like India or is it for emerging markets as a whole, because we are starting to see some green shoots as far as capex cycle is concerned in the Indian markets. Is that what you're noticing as well?
Yes. Yes, that's right. And we've been writing long-term outlook pieces in India, particularly highlighting the digital economy in India. And private sector capex is going to be as important as public sector capex in delivering on that, as well as more traditional basic infrastructure. And in fact, globally, our economists are telling us that capex should start to support growth overall. But remember that in some other areas, like the export recovery we've seen and some sectors that have been very, very strong in North Asia, DRAM and NAND and the semis and tech hardware space, we can't sustain these rates of growth, so they will soften somewhat. And something also to mention in relation to risks, and that is relevant to why we somewhat reduced our overweight on India recently, the oil price has been moving up, which classically is one of the ways that the cycle kind of begins to come to an end. So central bank tightening and higher oil prices would be key risks, but a pickup in capex, which typically happens also late in the cycle, that would be an opportunity.
Okay. Well, Rana, you know, what is your approach to India? Are you all overweight? And, you know, where is India in the pecking order in emerging markets for you?
So we are overweight India, and as Jonathan was highlighting, the global situation remains quite good. Global growth is more than 3%. Inflation is benign for now, it's below 2%. Central bankers are only tightening cautiously, so the liquidity situation remains good. In that global backdrop, of course, the global tailwind benefits India. Another powerful bottom-up India story is that of formalization, which I was referring to earlier. So that is a very attractive story, and this will do three things on a structural basis. Number one, the formulation process itself. So the formal enterprises gain market share, and sectors like real estate, sectors like retail, they should do very well in this scenario. Financial savings goes up, which is a very big positive, because then the investments can be funded a lot with the domestic savings, and it is positive for the banks and the wealth managers and the insurance companies. And last but not the least, our view is that because of the formulation process and the indirect tax reform, government revenues will eventually go up. So the call is that government can invest into the economy, into the infrastructure, in the rural development, but not at the cost of deficits. So therefore, that scenario also becomes quite attractive. So when you put all this together, structural elements, India looks quite attractive in terms of emerging markets, among other emerging markets. And if I may just quickly add, even cyclically, some of the sectors that traditionally investors have avoided, like state-owned banks, industrials, there the outlook is turning. If the NPL resolution process goes through smoothly and the recap happens, then we would believe at least the top-rung SOE banks will be back to growth again. And as capex recovers, the outlook on industry has also got to change. Okay. So both structural and cyclical elements are coming together for Indian equities in 2018.
Okay. By the way, just going by some agencies, it looks like the exit poll numbers could well be right. I mean, these are early days, of course. Yet. Let's see if the SGX Nifty has picked up any further pace. That also is something which we should be flashing actually on the ticker, apart from all these numbers, because that's what really matters for us. Okay, 38 points
even
higher.
at 14.4, which is what the leads now show, it looks like it will be Congress would be 60. I mean, if you extrapolate.
If you were to extrapolate,
no, it is the wrong way to look at it.
Yeah, exactly.
But I'm just saying,
we don't know, we don't know if these leads are coming from Kutch, Saurashtra, or
that's true.
that's
I completely agree with you. I'm just saying that it still looks like
a. For now, the SGX Nifty is moved to high point. Yeah, Jonathan, just one last question from my end. How important is crude oil going to be as a factor for Indian market? Because our last big reason for a correction was that surge towards 65 and above 65.
Yeah, so we did highlight this as a key risk to the outlook, along with China slowing more rapidly than consensus expects. And I think when we look at the fact that the OPEC plus Russia group has continued its supply discipline, or is intending to, throughout 2018, and that demand for oil is recovering, particularly in Asia, we think the oil market is going to be quite tight. And therefore, the current situation of inventory drawdown is likely to continue. So we may see spikes in the oil price as a risk to the markets. And in that regard, that's one of the reasons why we started to gradually reduce our overweight on India, which, as I mentioned, is still an overweight, but it's less so than before.
Oh, fair point. Well, Jonathan, one last question for me as well. Therefore, what would be your ordering of sectors? You did speak about capex and that you're optimistic about it. But in the sequence of, in the pecking order, would you still go for, say, consumer discretionaries, be more sure of consumption and keep, investment lower down, be more sure of retail banks, corporate banks lower down, anything like that?
So we like financials, and your other guest was just mentioning the state-owned bank recapitalization program, and that's very interesting, as well as the continued ongoing growth in the private banks. And then we like the consumer, with the exception of some parts of the staples complex that are more expensive. And we also like the industrial economy, broadly speaking, actually, across India. And we're somewhat more cautious on telecoms, software, and pharmaceuticals.
Jonathan, always a pleasure speaking with you. Thank you so much for joining in and giving us your thoughts. That's the word coming in from Morgan Stanley. But we're not done with this discussion just yet. Rana Gupta of Manulife is also with us. Rana, before we let you go, your own view, you did speak about state-owned banks, but what else is on your radar as an investment theme for 2018?
So, as you're discussing that, we are primarily playing the beneficiaries of formalization. And we do think organized retail gains a lot, because they can now reorganize their logistics, they can deploy new technologies, bring down their cost. Real estate is another place looks very attractive where the consolidation is happening. So these sectors look very attractive. In terms of higher financial savings, that's going to the banks as deposits or to the mutual funds as asset under management. So the financial space where they are getting a lot of this financial savings flow, those companies look quite attractive. And last but not the least, we mentioned about government spending, and we do think that a lot of the spending will go to roads and buildings and so on and so forth. So therefore, the outlook on the construction companies is definitely turning.
All right. Well, Rana, it's a pleasure having you with us on what's a very, very big day for us. Thank you very much for your thoughts on India. So basically, as a prominent investor, what Rana Gupta is telling us is that they're going to play the longer term themes, the formalization of India. Yes, a stable polity is going to help and it will, of course, be a near-term boost. But at the moment, the near-term boost is not showing. If you look at SGX Nifty, and we should be keeping SGX Nifty constantly on our radar, you know, with an outstanding, what looks like an outstanding lead for the rolling party, the SGX Nifty has actually lost a little bit.
You know
but
what,
yes.
I tell you something, you know, that outstanding lead is only by one agency. The others, you know, for example, there's one agency which is now saying 35-25. So, I don't know. I mean, it's, you know, different agencies are giving different numbers. Like our own sister channel is saying 19.9.
Now indicating, correct, 50%.
Of course, for now, we'll go with that. 19.9 is what we have at this point in time. But different agencies are giving different numbers for now.
Okay. Well, we will have to wait for the final numbers in any case. But at least one thing is very clear. No matter which agency you're looking at a substantial lead for the BJP. And I think that's what the market cares. So at the moment, it's a little intriguing why the SGX Nifty is not responding to it. I guess it's just picking up speed. We'll do one thing. We'll allow it to pick up speed, take a break and come back with a check on the key stocks that you should watch. Of course, you will watch for the index. You will watch for the index leaders, but other stocks that you should watch for the day in a minute.